my advice is to just take a step back and look at the situation that we're in and sort of get a feel for the general insanity of everything. And it's clearly getting worse by the week or the month or whatever short time you want to use. Whatever the craziness started in 2020, it just keeps getting worse, and the media gets less and less believable. And so, by extension, whatever they're saying about the monetary system and the dollar and inflation is getting less and less believable.
In today's news recap, silver price faces bloodbath as fears of global slowdown intensify. Silver price faces an intense sell-off below $28 as broadening demand concerns. Weak U.S. employment and manufacturing PMI prompted risks of global slowdown. U.S. bond yields weaken as investors see the Fed delivering a bulk rate cut decision. Silver prices down by more than 5%, skids below $28 in Monday's European session. The white metal nosedives to an almost 3-month low as fears of a global economic slowdown has intensified after a string of United States economy data indicated that the nation is moving towards a recession. Recent U.S. data showed signs of slower labor demand and sheer weakness in the manufacturing sector. The U.S. unemployment rate rose to its highest since November 2021 at 4.3%. Meanwhile, the manufacturing PMI for July contracted at a faster pace. Investors have remained concerned over the silver's demand due to China's economic vulnerability. The Chinese economy is going, though, a rough phase due to weak demand conditions in the domestic and the overseas market. Meanwhile, a sharp decline in U.S. bond yields and the U.S. dollar due to growing speculation that the Federal Reserve will deliver a bulk rate cut in its September meeting fails to lift the silver price. 10-year U.S. Treasury yields plunged to near 3.67%. The U.S. dollar index, which tracks the greenback's value against 6 major currencies, plummet to more than annual low. Silver technical analysis. Silver price weakens after discovering strong selling interest near the prior breakdown zone. The asset has declined to near the 200-day exponential moving average, suggesting that the overall trend is uncertain.
What I'm paying less attention to is what's going on with BRICS. And some people think that's a serious trigger, a serious issue that could cause the end of the dollar-based system. And it's true, it could. In my thinking, not really, because the whether the BRICS like it or not, their currencies are still based in the dollar, and they can't really get around that unless they're willing to go back to gold and silver, because there's nothing else that would subvert the dollar except for the metals. And as much as the BRICS say they want to get around the dollar, they can't unless they go to sound money, because that's the only thing underneath. And if the BRICS go to sound money, that means they have to trade honestly. And the BRICS are they're not saints. They're not great people. The people in charge of Brazil, Russia, India, China, South Africa, I think that's what BRICS stand for. I wouldn't call them, economically illiterate. They're just kleptomaniacs like the West. They're looking for their opportunity to be in charge of the kleptocracy instead of the U.S. So they want to inflate. That's what they want to do. So I don't trust them. And therefore, they're not going to be able to get around the dollar unless they're honest, and they're not honest. So what the BRICS is really doing is they're creating infrastructure, and infrastructure is important because if the dollar does fall, they'll need trading infrastructure, or they'll need currency infrastructure. So that's good, but it's not going to cause the fall of the dollar unless they go to gold and silver, which they're not doing. Maybe I'm wrong about that. Other people have different perspectives, but whatever. What I'm looking at right now is the rising repo volume, actually, that it's been going up in a diagonal since around late 2021, early 2022, if I'm not mistaken. Now we're trading about $2.2 trillion a night. And these dollars are finite. There aren't an infinite amount of these dollars to be traded every night in the repo market where banks lend to other banks. So I'm looking at the dollars in reserve, the bank reserves that are owned by banks. I mean, a bank reserve is, instead of if you have money in a checking account, let's say you have $10,000 in your checking account, that is on the bank's balance sheet, but it's a liability to you. They owe it to you. A bank reserve is the bank's own dollars in their checking account at the Fed. They don't owe it to anybody. So that's the spare dollars that exist. And the last time we hit a repo crisis was at the ratio of 87% of bank reserves were being used up in repo transactions. That's when the repocalypse hit. That's really when the last financial crisis hit. And arguably, you could connect the dots and say, though I haven't done the research on myself, but I think it's pretty plausible to say that the whole, China thing, let's not say the name, was an excuse to print money to mitigate the repo crisis that was going on since September. So let's just say I would take that as plausible. So once we get to a ratio of about 87% of current reserves being taken up by repos, I think we're going to hit another repo crisis, and then we'll hit another money printing bonanza. And by the way that the repo volume is rising and that reserves are falling together, we should be there in a few months. It could be 2 months, could be 6 months, something like that. But it's not going to be years, and that's what I'm watching right now. It's like just two trains headed in the opposite direction, and I see where they're going to collide. Not exactly when, but the direction is clear.
In an era where global economic stability seems increasingly elusive, investor and Austrian School of Economics student Rafi Farber champions the cause of gold and silver as bulwarks against financial mismanagement. According to Farber, the relentless economic turmoil since 2020 has rendered mainstream media narratives on monetary systems and inflation increasingly unreliable. He advises investors to adopt a broader perspective rather than getting lost in the minutia of fleeting trends. Farber underscores the need to understand the overarching economic insanity and the implications it has for future stability. Farber remains skeptical about the potential of the BRICS nations, Brazil, Russia, India, China, and South Africa, to challenge the dollar-dominated financial system. Despite their ambitions, he argues that these nations, much like their Western counterparts, are led by kleptocrats who are unlikely to adopt the honest monetary practices necessary for sound money. Farber posits that only by returning to gold and silver can these economies truly subvert the dollar, a step he deems improbable given their current leadership. A key area of concern for Farber is the rising activity in the repo market, where banks lend to each other overnight. He warns that the increasing volume, which has been climbing steadily since late 2021, could herald another financial crisis if bank reserves used in these transactions reach critical levels. Farber predicts that if the ratio of bank reserves used in repo transactions hits approximately 87%, a scenario reminiscent of the 2019 repo crisis, we could see another round of extensive money printing, exacerbating economic instability within the next few months. Now we'll show you the best clips of his latest interview with Commodity Culture, but first, hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our recaps. Enjoy the episode.
Keith, exactly. I don't quite understand fully his view, but I think I get the basics of it. And from what I see, the difference between me and him is that he sees the pyramid as gold's on the bottom, gold and silver on the bottom, and on top of that's the dollar. On top of that are other currencies, and that we agree on. And then on top of the currencies are stocks, and then bonds, and then other derivatives, and then Bitcoin all the way on top. Where we agree on that. Where we diverge is that he thinks that because the dollar is on the bottom of the pyramid, right above gold and silver, then by definition, when other currencies fall, right, they go to dollars, which is true, they do. Like what if let's say some third world currency dies, or like in Argentina or Zimbabwe or whatever, they'll all hoard dollars instead of their local currencies. So the demand for dollars there will go up, and that will keep the price inflation from hitting the dollar, because once because once demand for the dollar in foreign countries goes up because their currencies are dying, then that's the signal for America to be able to export their inflation to other countries and keep prices down at home. Fine, I agree with that too. However, the difference between Keith and I is that other currencies, other major currencies, not third world currencies, but like let's say the yen or the euro or the pound, right? These countries, or the yuan, these countries own a lot of dollar derivative treasuries, right? So when their currencies fall, what do? They sell the treasuries, and then they sell the dollars to protect their currencies. And once they sell the dollars, as the yen, let's say the yen collapses, they're going to sell treasuries because they have no choice, and that will bring the inflation back into the United States. All of the export of inflation that's been happening since, like, say, 1933 none of that inflation is gone. It's not like the United States exports dollars and then they just leave forever and that's it. They're done. But when other major currencies fall, they're going to sell treasuries, and that is going to bring the dollars back to the U.S. and exacerbate the inflation problem in the dollar. So Keith is right when he says, in my opinion, that when third world countries that have very few dollar derivatives, when their currencies die, they demand dollars. But when the yuan is dying, what do? They sell dollars. So when they sell dollars, who are they selling them to? They're selling them back to the States. And that takes the exportation of inflation that kept the dollar strong until now to importation of inflation, which exacerbates the inflation problem in terms of price increases, and the dollar dies. And then with that, all the other currencies die with it. So my thesis, in one sense, is that when a major currency is under threat of hyperinflation, the dollar will die with it, because a major currency with dollar derivatives is basically the dollar.
What do you think of Rafi Farber argument? Do you think he's right and a looming recession is likely to happen over the next 2 to 6 months? Are you stacking more gold and silver at these prices? Post in the comments section your plan, engage with other stackers within the community, and let's make gold and silver opportunities known to others. So share this video with someone who needs to stack more, and watch this video right here because it's a perfect fit for you. I'll see you on the other side.